All right, I want to touch on the action that we saw yesterday. It wasn't driven by AI. It wasn't driven by the Fed. What do you make of that big upside move for pretty much every index and a whole lot of stocks? We saw the small caps actually outperform. We saw transports go back to their pandemic high. What do you make of that action?
I think, Frank, what you had really is towards the end of the year, we had people taking some profits, some nervousness ahead of the change in the calendar. And then when they came back, they went right back to the call of cyclicals over defensives, looking for some upside action as good probability that the U.S. economy will benefit this year from not only the beautiful big bill, but also just from the fact that companies, the consumer, job growth, everything is working at this point. It's not robust, but it's resilient, and it looks like it continues with an emphasis of some different sectors right now, at least in the second day of trading.
You know, our Cedric pointed out a great point. Hard to find a bear on Wall Street right now. You're certainly not a bear. You're very bullish. Your price target for next year is 8,100, about a 16% rise from where we're sitting right now, or the end of this year. I keep calling it next year. It's 2026. Your price target for the end of this year is 8,100. So how do you see that playing out? And the first 2 days of the year, by the way, great stat from the Carson Group we just cited. First time since 2018 we've been positive first 2 days of the year. Do you think this is a sign of what's to come? Big upside moves when it comes to cyclical, maybe another big rebound when it comes to energy, or do investors go back to that AI trade?
Well, we think the AI trade remains part of the story. We just think it's the technology this year will continue as it already began, really. If you go back and you look at the sectors and the performance since the fourth quarter of 2022, a broadening of that rally began. And you get sectors like energy, industrials, materials sharing the stage along with technology, communication services, and industrials. And we think that's a very positive thing. It's a broadening of the market and a recognition that the economy is doing well, partly because of good Fed monetary policy, a significant stimulus by the administration, and also the effects of technology to help the other 9 sectors, out of the 11, use technology to navigate uncertain waters. Uncertainty is just a part of life and a part of the markets.
All right, I want to go back to some more of yesterday's action. We saw, obviously, the oil majors move higher, oil itself move higher. I don't know if you were listening, but our Jim Cramer said basically he thinks that's the end of that trade. If you were in it before this action, you saw the upside. He thinks that people that piled into it on Monday, they actually may be seeing a suboptimal return. Do you agree with that idea? Do you see more upside for the energy trade and the oil majors? Or do you think that trade, everything's kind of already priced in?
I think that I have a great deal of respect for Cramer, of course, but I must say this, that I think energy has further to move, though not on an exponential basis, because the world is awash in oil. Whether it's production out of the U.S. or elsewhere around the world, if anything, right now, until the global economy really becomes significantly stronger than it is right now, we are awash in oil. So that means that energy stocks are likely not to be among the major outperformers. But in terms of better performance, we've already seen it. I mean, it started yesterday, but we've held energy for a long time. We've held materials for a long time. We just don't emphasize them.
I think it's going to be debated for a while. By the way, just crossing the wires, Morgan Stanley expects, quote unquote, another period of oil price softness ahead. They actually see Brent crude falling to the mid-high 50s during much of 2026. Obviously, that would be a decline from the levels where it's trading at right now. Before we let you go, we got to talk about NVIDIA, the announcements at CES, the push into robotics, physical AI, driverless tech, your view just on what that could mean for the broader tech trade, because it seems like it opens the door for some other players to get involved as we see that push into physical AI.
Yep. Well, I've got to say, as you know, as a portfolio manager, Oppenheimer does not want me to comment specifically on individual stocks. But let me put it this way. In terms of the AI trade, it appears to be real. It is already in usage by many corporations. Related to autonomous vehicles, that's another question exactly when they will really become widespread. I think there's still some reasonable nervousness about them and how they're going to interact with individual drivers. But that said, technology, usually when the genie comes out of the bottle, it doesn't go back in. It continues to morph. The biggest problem for tech would be if it hit a plateau, and so far it does not look like a development plateau is in sight.